Hi, this is Shane with the Rational Trader. It is Tuesday the 2nd. My result for the day was 60, which is basically scratch. Let's take a look at it here real quick. We are trading with sort of a new set of parameters to based on some testing this weekend to help deal with the volatility. Let's say we start at 7:05, so that's here. And let's see, point of control is the blue dashed line. So we're staying out of trouble as we thrash around that. Got a shot at a short up here, but that's before we were beginning. So 295, we would have shorted on that bar. And 1, 2, 3, 4, 5. We would have got touched, may not have gotten filled. Let's see. So these are short. These are shorts that are showing up, but you're not getting filled. Is that right? Pay no attention to the piano in the background. Seems like we should have got filled here. I'm gonna have to look at that. I don't quite understand why I don't see a trade there. Okay, and then let's see, 141 break. What time is it? 7:29. No, that's right. Same thing. That kind of, I don't understand. I really feel like that should have gotten filled right there. Okay, so I'm gonna have to look at that. Whoops, that's the wrong button. I'm gonna have to look at that. Let's see. 122, long, no. 241. Your order gets placed, but you would get touched but not filled. This is the one that you like to see, right? So the 2 means that we made a prediction. The machine said don't do anything, but you're in exactly the right spot. So look at this. This is what I really like. Completely staying out of trouble here. So the bar has to be orange in order for you to do anything. And just very, very wisely standing aside here. And then you get a shot at it. At these bars. We actually make a prediction on this bar. The prediction is don't do anything. Let's see, pull down. Again, I like where we're looking here. Keep in mind we're dealing with the volatile models, so the signal has to be really clear or we won't do anything. So here we short and basically scratch. So we get enough. We get 15 ticks, but not 20. All right, the stop gets moved to entry +1. Beautiful fall right there. You got, and again, you gotta love where the system is saying, "Hey, take a look." All right, this is exactly the right place. And then we get long here. I just want to look at that as a human at a bigger scale. You see what happened there? The market bottomed here. You can see that little short like a W right there. And another one right there. So that's really what set this, that's what created this price level as a low volume node. Because the very little trading happened at that level. You come back down to it, and we get long. Gets first target, and then scratches. Market thrashes a bit. There are nice shorts here that don't get filled the way I've got it set up. So the 227, you're going to short it on this bar here, but the order is going to be placed way up here, and it's just not, it doesn't get filled. It has to get filled on the next bar. Okay, and the market's been so volatile, so whippy. Another nice fall here. Let's look at the places where we're looking. Again, now this one is interesting because here's a case where we don't blast through this low volume node, nor do we bounce off of it. We thrash sideways. And this is why well, interesting. Actually, you would normally expect this level to go away. because a lot of trading is occurring right here. But the fact is, it doesn't, and that means that at each of these points where it's trading, not much trading is actually happening. It's actually sort of honoring that level, bouncing off of it a little bit, coming back to it, bouncing off it before it does blast through it. Still, this is choppy ugliness that we would want to stay away from normally, and we're not staying away from it here. So that's something to think about. I don't like that. The wave delta chop avoidance would help, but we don't use that inside the value area. That's interesting. Nevertheless, we made a little bit of money there. Missed a nice fall. 274 is too aggressive. That's why we're not taking that trade. And then we get long here and take a small loss. So that's what's bringing us back down to that must be it. Yeah, that's what brings us back down to 60. Okay, so one of the things I want to do here is I'd like to run this with the model that is not so strict. So let's set up that in Sim and then see what the results are. I'm curious to see. Our expectation is it will get whacked because that model is less discriminating, right? It will take trades where the signal's not quite as clear. So when the way that we look at it is increased volatility equals increased randomness, and so we use a model that's more particular about what it wants to see before it'll consider a trade. So I'm curious. This is a lot of movement, all right, and the average range is still really high. It's between it's 85, maybe 85 points. That's a lot. I consider normal times back here, well below that yellow line. But I'm curious. So let's set up the model that's not so isn't looking for such a clear signal and see what we get. Let me set that up. Okay, so now we're set up to go. For you members that are following along here, you can see the well, here, let me just show it this way. In the configuration file, we're using the 30 instead of 45 model. Okay. And then we've changed the trade to trade simulation mode. And then the other thing you have to do is change the Sierra Chart Auto Trader to not send the orders to the trade service. We want the orders to go to the simulator. Okay. And now let's kick this off. We're starting at 10:02, which is today at 7 o'clock in the morning. Let's click play, and we'll just let it go, and we'll check back in a bit. All right, so here we are after the run for today using the kind of the normal model, minus 12.5, which means we hit max loss. Where is it? J40 something. Yeah, minus 250. So once you get above 215, it's going to stop. So let's take a look at Y. So basically what this tells me is that we're correct in using the model that's built for volatility. All right, so we take a short here, get a little bit, and take a small loss, and then a long here, and take a small loss. Same thing, it gets a little bit, and then get short here and take a full loss. Okay. And I circled this because I see that 297, that's a short. We typically consider that too aggressive. And I'm wondering if that's something we want to reconsider given some of the other changes we've made to get us more careful. So too aggressive means the market, usually the market's gotten too extended or something. But we're really sort of honing in on our locations, so I'm wondering if we want to consider taking those. It's easy to test. That's kind of the key benefit of what we're doing here. I think we're at max loss already, so now we won't get any more trades here. Let's see what came up though. Chop, chop, chop. So there's a long you'll get long here and either take a, let's see, where will you get long? Right there. 82.25. So you'll get 18 ticks. You'll scratch on that trade. And where will you scratch? You'll scratch back here. Okay. And then long, you won't get filled. Long, you won't place an order. Won't place an order. Okay, so then you actually survive that chop pretty well. It also, it's interesting, the faster model is also missing this nice fall here. So to the machine, both the machine that is looking for a clear signal and the machine that's looking for, is a little less picky, it doesn't look like the market's going to fall there. The patterns don't match. Sorry, I had to sneeze there. 274, this is a nice signal here. You won't get filled the way it's set up, though you might. Actually, you will. You'll get filled right there. My mistake. So that would have been nice. That's a little piece right there. Long. A 190. Oh, no, the low volume node. I see. Okay, 198 long. 251. This is interesting. I'm not exactly sure what happens here. This is I didn't think about this. So you have a case here where you've got a short and then a long, and the system's looking on subsequent bars. It's looking for a short on this bar. You can see it actually, right? You can see the red line and the green line right there. So the red line is applied to the red arrow there is related to that 251. So that would have come up first. So you'd short it right there, and you'd hit first target. So you'd make $100. And then what? And that's it. You're at the end of the day. So clearly the 40, the model built for volatility is doing better in these conditions. So a couple things to investigate there that might improve our ability to catch some of these moves, but I'd rather be careful here than bold in this environment. And so I kind of like the result. We're gonna go. It wasn't a whole lot, but it was basically scratch. But it wasn't a loss, which is kind of the important thing here. We're trying to damp down those days where you just get whacked, and this would have been one of those days right here with a minus 1250 points if you had gone with the more aggressive model.